Give me a few minutes here. Good morning and good afternoon, everybody. Got my tie on. Do 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 do. We're gonna talk about earnings, yeah. Hope everybody had a great weekend. Just don't drink and drive. Do 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 do. Good morning, retail. Good afternoon, retail traders. This is Washboardjim with a sneaky snake. Whoa, let's put this on a pause here. Hope everybody can hear me. I'm live. I don't know how many people show up. This is like the spur of the moment. I did a real long video on earnings and I didn't have my volume on. So I said, oh shit, I went back to look at it. I'm not talking. So I'm going to talk about earnings and what to expect this week. And we had a lot of this tariff. You seen what happened to the market on Friday. We had a pretty good little dip after the news with Trump coming out with the tariff talk against Mexico and Canada. It's about getting extra money in the market and switching things around for sure, but it's also about saving lives. If you could fill up the Superdome every year, that's how many people died of fentanyl. And that's coming up across from the border, and that's happened in the last 4 years. So it's been, a catastrophe, the open borders, and I think that's why he's putting the tariffs down. He just wants to stop human trafficking. So I think that could affect. Fat cats have a little different outlook on tariffs than they do on war. They love war, they love death. We are just the opposite. We want to try to save as much lives as we can. And the market will definitely react to the tariff news. So you could be in a good trade and all of a sudden you get a headline, Trump raising the tariffs, or he's going to put tariffs on Mexico. And the market, with their algorithms, will take you down. So you just want to be very careful when you're in trades. I've been kind of doing scalps. I called the puts on Friday and I didn't hold them. It could have been one of my biggest days of the month, or at least in a 30-day period. So this is a sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now. And I want to say hello to everybody out there. And like again, I hope you had a great weekend. And we're going to talk about the SPX. But here's the watch list that I'm going to be talking about today. It's going to be mostly earnings and where I think we could pull back and find a good solid support. It'll help you read charts a little bit better, at least the way I like to read them. And I've been at this for about 20 years every day. And I've seen a lot of guys in a lot of rooms that we all made our own little rooms, and they're multi-millionaires now by creating they were nothing at one time. I remember Zach Morris barely had $1,000, and he's run it up to hundreds of millions. I can just go name after name of people that I've traded with that are now successful at trading and doing their own thing. And so we're going to go ahead and talk about the earnings this coming week. I think it's going to be a good week, just kind of like last week. But you've seen the tariff news, the tariff with Colombia, how the market dipped on us. And then the tariff news that came out on Friday with Canada and Mexico. You've seen how the market reacted to that. And I played both trades pretty well. I did kind of screw up at the end of the day. So the ones we're going to talk about today, I have a stock X count. You can go down and below the content and find after this video's done, and find that stuff. The links to StockTwits and to Twitter. So we're going to talk about PLTR, Spotify, Pfizer, PayPal, Amazon, Merck, AMD, Google, Snap, Chipotle, CMG, Uber, Disney, Ford, QCOM, and we got ARM, Eli Lilly, Roblox, COP, and Yummy Yum Yum, YUM. And there's probably going to be some of these that I'll be watching this watch list all week long and taking trades off of it, especially if there's any knives. A lot of them are some of my favorite stocks, and some of them are my worst stocks, but they're still great to play. So let's get that out of the race. This is going to be the SPX. I already wrote this out on my previous video, so I'm just going to leave it like it is. We got the first support at the 9 EMA at 60.40.53, and that's right there at the 9 EMA. We did hit it all month long, and then the last 2 weeks we hit it and we broke out, and we hit it and we broke out. Back up here to a triple top higher high. So we had a triple top up there, and I'm using the body of that candle right there. We touched it there, we touched it there, and we touched it there. So triple tops usually expect a pullback, and that's what we got. She pulled back right to the 9. So right around 60.33.93. And then that next support's going to be the 21 EMA, the 9 EMA, and the 21 EMA at $6,007.77. And then we've got the 50 SMA, which is the next support level. These are all on the daily time frame at 59.90.73. And then we have the low support off the 63 down here, if we do get that low at 59.40. We could come back and hit the bottom of that candle right there at 59.67. But as long as we hold the 9, we stay bullish. We hold that 60.33.93. If not, we'll definitely come down and hit that 21. We did have a triple top last week, so I think we can pull down and have a little small correction for these fat cats to get back into the market. Now that's on the daily time frame. So we got Ford. I got these in volume highs. I like to trade volume. I'm a price action trader, technical trader. I don't trade much off of fundamentals. So it's all about the volume and the price action. And we got Ford with 103 million Friday. We have a major resistance level to break here, and that's going to be the 63 EMA or the 50 SMA. And we held the 21. So we got earnings coming out on this thing. Let me pull that chart up and move it over here so I can kind of keep an eye on when the earnings are going to come out. Ford is on Wednesday after hours. So we could consolidate as long as we hold that 21, and that's right around $10, and that's a good solid support level. We have a triple top, then we had the quad breakout to where she run up. So that could hold pretty solid right there, right around 10.07. If that doesn't hold, that's where we closed at. We could dip on down to the next support level, and that's going to be the gap right here at, well, that ain't much to talk about, 9.91. I was going to say right there, but that's only like 10 cents, 17 cents, and that ain't much. So as long as we hold this coming week at 9.65, it'll be good. And if not, that'd probably be where you want to get into the trade and run it back up. But I'm not too big on Ford. Resistance to break will be 10.33 all the way back up here to the 200 SMA right around 11.24. PLTR now is a good stock to be watching. This one here can really, I think, have a catalyst to break $100 in the year of 2025. And earnings will probably be good on this trade. It reacts real well to earnings. As you can see, we had a little breakout here that last earnings and just ran. And it's got Trump on its side. I really like the CEO. I used to not like him, care for him that much. But now that he supports the Jewish people and wants to get out of these wars, but yet his stock's all about wars in a way. So we got a resistance to break this coming week, and it's going to be this triple top, double top right up here in here, right around the 8305 area, 83. I'm going to use the body. I use bodies of candles for resistance levels, and I use the wick as a gift. So we got to break 83.15, and if we can do that, we're pretty much right there right now. If not, your first support's going to be these moving averages, and then I like to line them up with, again, the bodies of the candles. So I'm thinking low support right around 76.07, and it'll be off that 21. As long as we hold the 9 on the daily, we're still bullish, and we got to break resistance of 83.15. But I think earnings will be good. It's just the market reaction. How will the market react? And if any kind of pullback on this trade is a buy, in my opinion, a buy signal. And I think the lowest possible support will be right around $70 to hold. If that holds, that $70 would probably be your best spot, because that's an inverse head and shoulders. You have your left shoulder, then you have your head, and it could pull easily back to that right shoulder and then bounce back up. This is also a Darvis box and a rising wedge. So if we do break that 83.15, you want to take your trend line. Let's pull that trend line up and run it off the body of that candle right there to the next bodied candle, and that runs it up to right around $87. And that'll be your hard resistance to break out of. Right around 87.66. With your lowest possible support right around $70 to hold. And that's a Darvis box. It's also inverse head and shoulders. And it could be the 1, 2, 3 up here for a hard resistance at 87. AMD is another one. Now China will, he's talking about China too, tariffs on China. They got to stop bringing that fentanyl over here. They stop bringing it up through the Mexican border. So, plus who knows how many Chinese spies have gone through the border since the open borders in the last 4 years. I know a lot of them have. But I love China. Don't take me wrong, China. But that could hurt Elon. That could hurt Tesla, because the fat cats hate Tesla. So we could see a pull. I might add Tesla to the list. But we got a big old nasty snake right here, kind of like a fallen wedge. And we're going to draw that in real fast and show you what I'm talking about. Take again the body, run it to the next body right there. And we got a 1, 2, 3, and this thing could dip on down to that fourth time, right around 112, and that's where we had that last week's low, right around 112 something. So I'm going to, and also we have, this is called a wedge. This is called a wedge. So resistance to break will be that wedge at the 21 EMA. And I'm going to put 2 trend lines on here where I think support should hold. And if it doesn't hold, we could get very bearish. And that's going to be on the bottom of that wedge, right around 112.56. And then it's going to be the top of the wedge, right around 120.53. So those are going to be your hard resistance to break at 120.41, 120.50, somewhere in that area, with a solid support at 112.56, which would make it a double bottom on 5-day time frame. If that holds, we could easily run that thing back up. Now, AMD is going to be one of my favorite trades into 2025. So I'm just waiting for it to start to break out and start to run up to the upside. I'll keep a real close watch on it. We got Pfizer. Pfizer's not much. If it does break out, you get to 27.88, 27.83, and support to hold is going to be right around $26. If that doesn't hold, she'll drop down to 25.22 with a low buy, a solid buy at 24.68. So this here is an inverse head and shoulders. You have your left shoulder and your right shoulder, and that if it pulls back, that could probably bounce up off that and then come back up. Or it breaks resistance at the 200 SMA, which a lot of your fat cat traders will trade off that. As long as we're under the 200, we're bearish. If we're over it, we go bullish. So if it gains respect above the 200, we start running it up to the upside. If it doesn't hold that 200 at 27.83, it can easily pull back and hit a double bottom down here on the 52-week time frame. But we might stop at that inverse head and shoulders. That's your left shoulder, your head, and your right shoulder. Amazon is another great stock to be watching. It's had a real good run. It's run up over, 70-80%. 151.63 on that dip, all the way up to last week high of 241.70 something, 77. So it needs to stay above the 9. If not, I think it can pull back and hit this 50 SMA where we hit once before and bounce off that 50 SMA at 222.30 with a resistance to break right around 239.47 with a pivot point. A pivot point, what is a pivot point? Pivot point is the middle of resistance and support. And that could be like, if it pulls back to the pivot point and holds, we could still stay bullish. If it doesn't, it'll dip on down to the lower parts of the support. We also have what you call a megaphone pattern on here. Megaphone pattern are great for trading when you have a lot of volatility in the market. Like if we were ready to have, if the market was really going to get serious on selling off, you'd want to go ahead and draw in that megaphone pattern. And I'll draw it out for you. You have two different spots on here. And I've taken the body of that candle and running it on down. And then you have this body right here running it on up. And you could also go ahead and put in a megaphone right here. So a little bit of right around 240 would be the resistance to break. If we don't break that resistance, like we hit it last week, we hit it 3 different times. That's how you create a megaphone, is an expansion pattern. And the pivot point in that megaphone would be right around in here somewhere. Somewhere right in here where you have that previous high, and that previous low. So we're going to put a price line, and that'll keep it bullish right there. If we can hold 228.75, we could stay and go break out of the megaphone. And that would be right around the 21 EMA on the daily. If that doesn't hold, it can easily drop down and hit the 50 SMA and maybe even come down here and hit the 63 EMA. We have the SMA and the EMA. And that'll be the bottom of the megaphone for a strong buy. So I'm going to put in a little alert off that 50. Right above that, or I'm going to put it right above the pivot point. And that'll keep the stock bullish. If we do decide, we got the Fed speakers coming out this coming week, PPI's coming out, and then you're going to have to be listening to, I don't listen to CNBC, but they're going to be crying and whining about the tariffs. That'll probably be the first news article they come out in. It's weird how things react sometimes. I'm a sentimental kind of person, and I don't like wars. But the market loved these wars, and we had one of the best runs that I've seen in the 20 years that I've traded because of all the money that's been spent. We spent way over budget, $14 trillion in 4 years. So that was a lot of liquidity to throw into the market. They don't care about the debt. Trump does. So the fat cats are kind of at war, but I think he's onto the right thing because I'm a business owner, and the inflation has just killed my business. That's because of government overspending. So 240 to break. That's the top of the megaphone. If that doesn't happen, we could easily pull back to the pivot point right around 230 area. And that's going to be Amazon. That's a good one to watch. I mean, same as Google. Amazon delivers their own packages now. You know, UPS is going to lose 50% of the business from Amazon. That's a 50%. That's why UPS did not do good this week when earnings came out. They said 50% is going to affect them. That's their biggest account. So we got Google next. We had an all-time high last week on Google. Google's another one that's a chip maker, and it kind of kissed Trump's ass here in the last, a couple weeks ago, and definitely at the inaugural he showed up. So we have a support level. We have an ascending triangle right here, and we have a rising wedge. So I'm going to put both of these trend lines in here. The price line is going to be the top of the support level, right around the 9 EMA, right around 197.18 to hold, just around $200. If that holds, we could keep this momentum going, but it's had one heck of a run in a week, and it could be liable to pull back and find that support at 197. We also have what you call rising wedge. That's a rising wedge right there. So that can pull back to the bottom of that rising wedge and find support right around 193. That's where you want to put your price line, right there on the bottom of that channel. Right on 192.80, 193. If that holds, we stay bullish, or it pulls back to the 50 SMA for a solid buy. Now, Google brings in a ton of money, mostly advertisement. So I think, and they make chips, they're into AI, they've got all kinds of good things going for them. Revenue is going to be real good on this stock. Right around 204 is going to be resistance to break. Support, again, right on the bottom of that rising wedge, right around 192, with a pivot point area, which would be the top of that ascending triangle, right around 197. Snap's on my watch this coming week with earnings. When Snap come out, let's figure this out here. Snap. Where are you? Snap comes out on Tuesday after hours. So we got the 200 SMA at 112.34 for resistance to break. And we're going to take it to the body of that candle right there, right around 12.43. And if that doesn't break there, or if it does, it'll run up to about $13, 12.93. And if it doesn't hold, we could easily pull back to a triple bottom down here, right around 10.43. And that's got to hold. That's a pivot point on the yearly time frame. So right now we're in resistance land. This is a Darvis box. That's a sideways channel. And it could go on for months. So far this has been doing it for 3? Every bit of 3 months. So it'd be a hard resistance to break at that $13 level. If it does, we'll start to shoot up. If not, we can pull back to the bottom of that Darvis box at 10.43 and be a scalp trade back up to the upside of that previous high, or the 200 EMA. Let me check something out here real fast. Any questions so far? Everybody say hi in the chat. Only got 5 on here. That's okay with me. So the next one is Uber. Uber's got the 200 right here. 200 SMA at 69.71 for resistance to break. 69.78. That's going to be the 200 SMA with a solid support down here on the bottom of that candle at 63.57. Now, I'm bullish in this trade also. They tried to pump this stock when it was at an all-time high, saying it was going to 120. I said, no way. We did pull back down here to a low support. And so resistance to break is going to be the 200 SMA on the daily with a solid support right now. Unless it does not hold, we got around 60 bucks, but 63.50 is going to be your support level for right now. If it doesn't dip, we could drop down another $3. We got Merck. Merck's on here. We got a triple bottom on Merck. We also got a wedge, a falling wedge, and we'll draw that in here real fast. It's not much of a falling wedge, but it is out of a big old long snake, breakout, pull back, boom. So this Merck could probably pop if it breaks that resistance level of just under $100. Right around 99.69 with a triple bottom support down here at 95.40. And if that breaks out, the hard resistance will be above the 63 EMA at 101. And then she'll just come up to a double top at right around 103. This will probably pull back to a triple bottom and then bounce back up, as long as we hold that 95.40. We got BMY on here, Bristol Myers. Here's another one with an all-time high of a double triple top, right around 60.83. Low support to hold is going to be the triple bottom, and it's kind of got a downward twist to it. So we'll draw that trend line in here. Right around 55 bucks. A little bit below 55. Solid support, 54.82. So if earnings don't react well, it can pull back. If it does react well, we got a 1, 2, 3, 4 quad top to break. We've got Roblox, all-time high. It's kind of overdone. We could see a pullback on this trade pretty easily. And I'm going to keep these moving averages in mind when it comes to that. And I'm just going to go off the moving averages. Right around 68.47, 65.45, and then a low support at 64.23. If neither one of them hold, we're going back to 60 bucks. But Roblox has had a real good run. Oh yeah, it was the TikTok takeover. The TikTok takeover. The CEO was thinking about buying TikTok or going in on it. So that's probably why this stock run like it did. So it could easily pull back to 64 to 65.50 area and be a solid buy. And we got Peloton. This one, you know, it's had a real good run all the way from 270, almost a 400% run, 350% run. We're going to take it back down to the gap, and that's going to be your solid support at 723. If that doesn't hold, you could see the 200 EMA or the 200 SMA. Right around 551 for a strong buy to run that thing back up. We bounced off the 200 here and bounced off of it here. Either one of them support levels. Chipotle. We got a triple bottom down here, a quad bottom down here on Chipotle. Right around 55.60 with resistance to break at the 63, which would probably bring it up to the 50 SMA on the daily at 60.36. So that would have to break. If that can break at 50 SMA, we could take it up to a higher level. Probably get it up to 62.85. This is Chipotle. We've been in this here box for quite a period. So $55 should hold. 55.60. PayPal's been in the news a lot. This one here was one of my favorite trades when COVID started to come out. We ran this thing up. I mean, we ran it up, we ran it up, we ran it up. And she's had a pretty big pullback since. Let's go to the 20-year yearly. This thing ran up all the way to $310. And she pulled back and bounced off to 63 two years in a row. Each one of these candles represent a year. So we got to break the 9, and that's right around 94.15. And if that doesn't hold, we'll easily drop down to 77.67. And that's going to be PayPal. If it breaks the 9, we're off to the races. To the next resistance of right around 109. And it's kind of due. We got ARM. ARM has a lot of volatility. As you can tell, these candles look real nice. We respect it each year. And we've had a pretty good run this year. So we're going to take this back to the 190, the daily. And we're in a big long Darvis box. So the resistance to break is going to be this gap. Right around 160.68. And support to hold is going to be the 21 or the 9, right about the 9 EMA, and we're going to raise it up to the top of the body of this candle right here, right around 155.27 to stay bullish. If we pull back and hit that 9 on the daily, we could stay bullish and play in this channel right here. This is called a gap. I don't know if you're familiar with what a gap trade is. But once we broke that gap, we run it, we filled that gap in. So it could easily come back down and hit the bottom of that gap and be solid support and still be bullish as long as you're above the 9. If not, we'll come down and hit the 21. And then we're going to use the body of this candle right here, right around 150.07. And then just keep going down to the next body, then on down to the next one. So low support right around 145. But I think if we hold the 9, we can play in this gap. QCOM, here's another one. We've got a resistance level at the 200. That's a double top. So if we break the 200, we can run this trade up to 177 and then 180. If it doesn't break up and it holds the 9, and then the 21. I've been trading with these moving averages for quite a while, and they're pretty accurate. Especially when I'm looking at swing trades. As long as we hold the 9, we're still bullish. But if we could pull back easily and hit that 21, and that's right around that 166.50 area. Disney's another controversial trade. Fat cats love this stock. It reacts well. Once a CEO takes over a company, a new company, and they have a lot of feelings and they know a lot of pride in their CEOs, their turnaround CEOs. Bob Iger is one of them. I think I don't particularly like Disney stock that much. If it was just like the Disney Cruise Line, I'd be all for it. But they got into woke, and it kind of hurt the stock. We had a big crash on it. Then earnings haven't been that well. And they've got the View, they've got a lot of crap going on. I can't stand the View. They're into movies. Movies haven't been that great. But there's got to turn around sometime. And we did bounce up off of just a little bit of earnings were just a little bit good, not much. So we got a gap down here and we got a gap right here. So that low support to hold this week, solid support, is going to be right around 106. If that doesn't hold, we'll easily drop down to 102, right above $100. As long as we stay above the 200 SMA, we're still bullish. And resistance to break this coming week, right around 117.82. And that's going to be a head and shoulders. If we hit that there, that'll be a double top. Right around 117.82, 117.50, 117. Doesn't always have to be right on. Then we got COP, oil, ConocoPhillips. That's my debit card. My credit card is ConocoPhillips. I can use that card all month, and then I use it with my business. So, I pay it off every month. So that's the gas I use 99.9% of the time. We could easily pull back. There's going to be a tariff war is going to be on oil. If Canada and America get into it, I don't think they will. We've got a young punk up there running the country right now. But $95 is your solid support for a double bottom on the 52-week time frame. And resistance to break is going to be this tight wad of moving averages. So we're going to go to the 50 SMA, right around 102.80. And if that breaks, we could see 106. Say hi in the chat. We got Pepsi next. I think we could easily come down and double bottom, or we could easily come up and break the 105. Earnings should be good. Pepsi. Here's another one. I haven't had a soda pop in years. I think last year I took a drink out of one and I spit it out. I can't stand it. I can't stand sodas, but I'm just me. A lot of people, our country's obese because they overdo it on sodas, and they're more into sodas. They got a whole line of snacks and shit that I don't eat either. But earnings could be good. We have a head and shoulders, inverse head and shoulders right here with that support. So that's going to be your pivot point area, 150.54. If that breaks, we could probably get $3 out of this trade. Maybe run it up here to the 63 if we don't break the 50 SMA. If we do, right around 155, $5 trade. If not, she'll pull back, and that's a solid support right now. That has to hold to stay bullish. If we dip on down, we could see 146.51 easily, or a double bottom on the daily. But for right now, it's sitting where it needs to be, right above the pivot point. Long 150 be a $5 trade up, or a $4 to $5 trade down. And I'd buy it if it dipped. We got another good stock here, Lilly. She's been in a Darvis box for the last 2.5, 3 months. And she has resistance to break, and that's going to be the 200 SMA. So it could come up and hit the 200 SMA. It hit the 200 SMA, 200 SMA, and the 200 SMA. And I'm going to put it right there at 837.25. And then we have an inverse head and shoulders right here for support. You take the body of that candle, run it to the body of that next chamber right there. And that's an ascending triangle too. That'll be an ascending triangle at the 200. So this looks like it's getting ready to squeeze and just wanting to do something. If it doesn't hold that support level, right at the 50 SMA at 776.93, we could easily drop down and connect another head and shoulders right here at 755. And then you got this low low bar right here, a 1, 2, 3 setup with a higher low. Right there at 727.81. 727.81. I'm going to make sure this thing's on, because last time I could be doing this whole recording. Y'all can hear me, right? Yeah. So right around 727.81 for support. And that'd be the bottom there of that 1, 2, 3 channel. It's kind of hard to say where I want to put this. I'll just keep my same number at 727.81. If it pulls back, we're at a resistance level right now, so it's got to break that 200 SMA to be bullish, and then we got a gap fill at 865. As long as we're below that 200, we're still bearish, and we could pull back. That's going to be Eli Lilly. Then we got Spotify. Here's one that's had one heck of a run this year. One heck of a run. I think it's due for a pullback back to this 504.20, and that's about a $43 dip. And if we can hold that 504.20, that's an ascending triangle. And usually an ascending triangle, what was resistance now becomes support. So this thing could easily pull back and bounce off this here number right here and be a very strong buy. Spotify. It's all going to be about the earnings on this trade too. I like it. I like the setup. I like it. See it pull back. We have what you call an inverted hammer, a shooting star, which is bearish. And that could shoot down and hit the 9 and bounce off the 9. But that's a bearish candlestick. But we've had, a real good week with an all-time high, and it needs to consolidate. So off that 9 and holds, you're still very bullish in the trade. If not, she'll come back down and hit the bottom of that there. And that'll be right at the 50 SMA, right around 480.83. But if we stay above the 9, we're still bullish, because that's the ascending triangle. Well, let me see here. The ascending triangle was right here at 505. That'll be your strong buy. But if we stay above the 9, you could run it back up and do a double top and find resistance at 550. 550.68. That's going to be your resistance this week. And if that breaks, you can run it up $10 and do a double top off that wick. But that's, like I said, a bearish flag. And this can easily drop to the 9 and bounce right back up and break that resistance. Then the last one, plus we're going to do Tesla. Let's look at the weekly time frame on this one here. When you're in doubt, zoom out. We had 3 white soldiers on the weekly time frame, which is telling me we can consolidate at the 50 SMA or the 9. That's the 9 right there. So we could have found resistance, and this thing could easily pull back to 128.93 and still be a very strong buy and run it back up and break that 9. Now that's on the weekly. And then your hard resistance will be that 21 right at 132.43, and then long to 134. Yum, emerging outperformance, Oppenheimer says. Bank of America just price target to 143 to 144. So everybody's lowering the price targets on this one here. I think we hit resistance. These are called 3 white soldiers. That's 3 consecutive weeks of a run. They're bullish. As you had 3 white soldiers here, we consolidated and pulled back. We had a little breakout in this megaphone. It reacts well to earnings, except right here it didn't. Kind of did. It came out and we had it high. So we got earnings coming out again, and I'm just leery about this one. If we break the 9, we'll go higher. If we don't break the 9 on the weekly, we'll come back and hit the 200. Right around 127.48. That's only a $3 dip. I'm going to keep an eye on Yum. I don't trade it that much, but I like this pattern. And if we just consolidate to the bottom of that body of that candle right there, I think we could run this back up and play within that candle. And that could be a good little swing trade or even a daily scalp, especially if you hit that 128.93 and you run it up a couple bucks and get out of that trade on a daily scalp. Starbucks CEO draws a Taco Bell breach. Yeah, everybody lowered the price on it last week, probably because they saw the 3 white soldiers. That's a leading indicator for initial breakout again, but it took 3 months to do it again. It did kind of break out from here to here. That's a good $5, $4, but I don't know. I think it's going to pull back and try to land off that 200 SMA. All right. Well, that's it for the watch list. Does anybody have any questions on any stocks that they're watching this week? Hello, Chris. Do you think we should keep an eye on Eli Lilly? Well, let's go back and look at it in a smaller time frame. So I said we had to break the 50 and run it on up. Then you got a triple top up here at 961. If it comes up the third time. But I think it's got to break that 50. So let's look at the 20-day 1 hour. It's had a pretty good run. I'm thinking if it does pull back, it's going to be that 778 area. And that'll be on top of that trend line off the 200 SMA on the 1 hour. Now if you pull up the 5-day 5-minute, we could pull back right here just under $800 and be a strong buy. And if it breaks 811.72, we could run it back up and hit this head and shoulders at 824.34. We'll keep a good eye on it this coming week. And when do they come out? When's earnings come out on that baby? Lilly. Lilly comes out Thursday morning. So probably some consolidating on Wednesday. Right into close. Well, we got O'Reilly's on here too this Wednesday. O'Reilly's, man. I know a guy that made $1 million on trading. That's all he traded. He worked for the IRS. He put all of his money in that. He worked there for 30 years. What was that? ORLY? Look at that stock. He made a killing on it. I know he was giggly. It run like 600%, 700%, he told me. He says, all I do every payday, I throw so much money in this trade. And they raised the price target to $14.25. Now, if we go into like a recession or people want to repair their cars, this stock will still go. That's why it ran up so good during the the Biden administration. It's because they were trying to get out of these gas cars and throw everybody in electric. And it did nothing but, so people didn't buy cars. They didn't buy them. They just repaired their old ones or bought used ones. And with high inflation, they got too expensive for a lot of people. This is a good stock. I should start trading it more often. They got a price target to $14.25, so they got $130. 1400, 1425. Wells Fargo wagon. RBC has 1416. Guggenheim maintains a buy at 1400. Morgan Stanley has 1450. Morgan Stanley upgrades O'Reilly Automotive from overweight to equal weight, just price target $300. From $14.50 all the way to $11.50. So this thing could run. I'd say $1,400 if I was to do it. That even number, whoever this was, they got it right. Gunningham. Okay. Well, anybody else have any questions? This will be recorded, so you can go back into my live. It might also be on videos. I'll put a different picture on it instead of the early bird special. I'll put the earnings whisper thing on it. If you have a stock twits and man, I did a video right before this. I'd bet you I was on it for 40 minutes. I was ranting and raving, and after I did the video said I ain't going to do that again. Talking mostly about the tariffs. We got to be very careful because the fat cats are fearful of the tariffs than they are of real wars and the death of people. Or the open borders don't bother them. They've been saying, well, if we move people back down to the southern border, it's going to hurt unemployment. That's what they think about. All that cheap labor. All my liberal friends show pictures of migrants in the fields harvesting, and I shake my head. They didn't care about the price of goods or nothing for the last 4 years, high inflation, but now they care. Now they're worried. Well, it's just a sight to see. I'm going to go ahead and get on out of here and go do some exercises, and we'll see you all come Monday morning. I'll be live. And I want to say thank you, everybody. Any more questions before I leave? I got my tie on. Went to church today. But this will be recorded, and it's all about the earnings and we got a lot of Fed speakers coming out. We got the PPI coming out. We got a lot of stuff coming out in the news, but we also have earnings. And I think this week's earnings is not as exciting as last week's earnings because it was mostly about tech. But we do have AMD on here, and that'll be one to keep a close eye on. And Roblox. And Google. And Amazon. I might pick 5 of my favorite stocks out of this watch list and trade them only this coming week. I think I could do that and get away with it. Those would be the ones I'd be watching. Would be PLTR. That'd be definitely one of them. AMD would be 2. Google would be 3. Chipotle might do good because it's oversold. Uber would be 1. Disney would be 1. We got Toyota on here too, but I don't think that'll be as good as people think. I like that O'Reilly's, but that's going to be expensive. We got Lilly and Roblox, and then we got Amazon. Those are my favorites. We have a firm on here, AFRM. That's a good one. But Friday's going to be a day off. Probably pull back on Friday. And wait for more tariff news over the weekend. But those would be my favorite ones. Race, Merck. We don't have no airlines on here. We don't have much tech but that AMD and Google and Amazon. I'd be watching Amazon. Any pullback on Amazon will be a good buy. Lilly, it's kind of at resistance. If we get a pullback on it, it'll be a good buy. And if it breaks resistance, it'll run up. That's a good one to watch. PLTR is also another great one, but we're hovering at resistance levels on it too. So pull back on it, or it finally breaks out. I think it'll break out next earnings, not this one. Well, I'm going to get on out of here. This is a sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now. And again, I appreciate everybody getting on here. We just got 5, but that's good enough for me. They'll come back and watch the recording, maybe, if they want to sit through all this. Yabba dabba do. See y'all later. God bless y'all.